All right, so I know that a lot of you might just be getting started trading, or you want to improve your trading by learning, this, super easy, super basic confluence that can, improve your trading by, a significant amount. So what we're going to be going over today is the fair value gap. So what is a fair value gap? A fair value gap is a 3 candlestick pattern where the wicks of the first and third candle, right, the top wick of the first candle and the bottom wick of the third candle don't cross over each other. So, right, in a live market, it would look something like this, right? We have the top wick of this first candle and we have the bottom wick of this third candle here. And as you can see, they don't cross over each other, leaving an imbalance in price through this center second candle. So what can we use these imbalances for? Well, when we're in the market and we identify one of these fair value gaps, right, we can expect price to retrace into this fair value gap, trade into it, and then respect it and continue trading higher and higher. So we can use it to take an entry, right, and get a good entry for our trade. So down here, I have an actual fair value gap marked out on this chart, so you can see that it works and it's in the market. So right, we see here 3 candlesticks, right? First wick is here, third wick is here, and we have an imbalance in price across this middle candle. So what do we see? We see price retrace into this fair value gap. We see a closure above this fair value gap, showing us that it is likely to be respected. This midpoint here is called consequent encroachment. So what we can see is that price trades into the fair value gap, but respects consequent encroachment, right? Does not close below it. And we see price close above. So we could take our trade from right here after this candle closes above, set our stop loss below this swing low, and then we can target 1 to 1, we can target 1 to 2, we can target 1 to 3 and higher. And if you want a separate video going over how to choose your targets, then I can do that next week, this weekend, whatever you guys want to see, whatever would be helpful. But right, here's another example, right here, 3 candles right here, right? We see this wick here, and what are we left with? We're left with an imbalance in price here. And what do we see? We see price retrace, trade back into this fair value gap, closure above, so we can take our trade from here, right? And we see that consequent encroachment is respected because price does not close below it. So we can set our stop loss below the swing low. And what can we target? We can target 1 to 1, we can target 1 to 2, we can target 1 to 3, right? And so on and so forth, right? Because we see that price has retraced into this fair value gap, respected it, and traded higher. And then formed the second fair value gap, traded into it, continue higher. And what does this show us, right? This is an uptrend, right? We have higher highs, higher lows, higher high, higher low, higher high, higher low. This is how higher highs and higher lows get formed. So we can take our trades from these higher highs and higher lows, right? We want to take our trades from the higher lows so we can catch the stronger move to the upside, right? Another example right here, we have 3 candlesticks right here, right? We have the top wick of this candlestick, bottom wick of this candlestick. We create a imbalance in price. We create a fair value gap here. And what do we see? Price trades down into it, respects consequent encroachment, closes above. We could take our trade from right here, right? This could be our reentry. We could move our stop loss from these entries here, right? Stop below the swing low. Trade, target 1 to 1, 1 to 2 would have got hit, 1 to 3 would have gotten hit, right? So that's how you can use it in a bullish example. And just to show you that it works for a bearish example, we have a fair value gap marked out over here, right? What do we see? We have a bearish example here, right? Top wick, bottom wick, imbalance in price on this candle, right? And when it trades lower and does not enter this fair value gap, what is it called? It's called an unmitigated fair value gap because price hasn't retraced into it yet. But what do we see here? We see price retrace to this fair value gap, right? Respect consequent encroachment, continue lower. And how can we enter this trade? We can enter this trade from here, right? We see price close below, right? So we can take it from here. We can set our stop loss above this swing high, right? Targeting these lows, these lows, these lows. Obviously, right here, we had a move to the upside, but if you were on, I actually took this trade when this was happening. So we had an SMT divergence here, which I can cover in another video. But as you can see, this is our first indication that, the price, the direction is shifted and that we want to be taking trades to the downside. So this is going to be our first indicator that we want to be looking for short trades, right? So going back to the examples, right? Very commonly, you're going to hear these referred to as BISI fair value gaps. What does that mean? Buy side imbalance, because we have an imbalance in price on the buy side of the curve. So that means that the imbalance, right, is on the buy side of almost like a bell curve, right? So when you're trading, you're going to see the market move like this, right? This is the sell side, right? Because we're selling, we're pushing lower. And then market will move to the buy side, right? So this is the buy side, and so we're looking for these buy side inefficiencies to be able to take trades higher, right? So this is called a BISI fair value gap, right? Buy side imbalance, and then sell side inefficiency. And then in the other direction, what is this called? SIBI fair value gap. Right? What does that stand for? Sell side imbalance, because we're now on the sell side of the curve because we have bearish PD rays supporting price lower, right? And it's a bullish inefficiency, right? Because we're now on the sell side of the curve and we're projecting price to go lower, right? So how do you use these to take an entry, right? So when you're in the market and you see that we're in, we might be in a sell program, right? We get a break of structure to the upside here, right? So when you see this break of structure, what are you looking for? Well, you're going to look for a bullish PD ray to support price to go higher in this direction. So you see this break of structure. So now we are, looking for trades to go long, right? So, right, there's going to be these retracements, right? So what are they going to retrace into? Well, right here we might have fair value gap, right? Price retraces into it. We take our trade from here. We can target this liquidity, this liquidity, this liquidity, and liquidity up here and even higher, right? When price retraces here, what are we probably trading into? Fair value gap, right? So these are super helpful with finding better entries, taking entries on reversals, right? If you want to take an entry on a reversal, where are you going to find where to enter? You're going to look for a fair value gap or something of that nature to be able to take your entry. So in last week's video, or not last week, 2 weeks ago, I believe, we covered inversion fair value gaps, right? So what can we do? We can use, right here, we have inversion fair value gap here. And that could show us that price wants to move higher, right? And we can pair an inversion fair value gap with a fair value gap to take trades. And that is exactly how I got that 1-to-8 risk to reward trade literally today. So if you guys found this helpful, I'd love to, hear you guys, what you guys want to see next, what I can help you with more, what I can help you with, on your trading journey. But with that being said, that's going to be it for today. Try to be as thorough as possible. If you guys, need anything else, obviously my Instagram is in the description and link to my channel. And, if you guys have any questions, you guys can just leave them in the comments. So that's going to be it for today.